All right, guys, welcome back for another video. In today's video, I want to share a source of edge I use on the monthly chart in Bitcoin to identify trend exhaustion or a change of market behavior, a little bit of a shift around on some of those longer term trends, and that's using the monthly highs and lows. So we can go here, in the spring 2021 consolidation up here, you had a distribution pattern more identifiable on daily. You'd see three drives of distribution marked by these monthly highs here. But ultimately, what you had was you had a sustained uptrend on the daily with higher highs being taken out, pretty obviously so. But I think the important distinction here is that none of the lows were ever taken out. I mean, this is so parabolic that really the lows didn't even get tested. But ultimately, what happens up here is the lows do get tested and violated right here. So this is generally a good area to have a stop loss. Typically, I mean, if you obviously there are better opportunities to manage risk higher up if you're using like a daily time frame, but at the very least, right, this is something to keep an eye out for, and it's especially important, and I'll demonstrate why. But it's important because this is the area where volatility generally picks up pretty dramatically in the market. When price shifts around a monthly trend of taking out the highs and starts going for the lows, that's where volatility comes into the market, pretty dramatically so. And the important distinction here is that we're not talking about a downtrend on the monthly, right? At this point in time, it was a very clear uptrend. So we're not talking about a downtrend. We're talking about a change in behavior in the way that the lows are defended. So here you see, the lows being violated within the context of an uptrend. So if we go down to the daily chart, you can see pretty clearly that actually, that is in fact where ultimately the volatility came in, right? So structure broke much earlier, right? Structure broke here, setting in that monthly low here. So this was the monthly low after structure was broken, your indecision month, and then price ran up into a bearish 618. Elon Musk gave his speech. Well, he was on. This was the. I remember this exactly because I was trading this day. Elon Musk was on Saturday Night Live talking about Dogecoin, and that was the exact market top right there. I remember it because I was in a short position, and I had based off this trade idea off the 618, and I had a stop up above this candle's high right here. So just a little bit above uh, 60,000. And I remember this because I had my entry here, and price basically, you know, uh, yeah, I got a good entry, and it seemed like it was working out initially, but then it made another run up, uh, put my position underwater, and and spent a few days creating new highs. And honestly, at that time, it felt like I remember watching price, and I remember watching price run for my stop up. It felt like price was reaching for my stop. Like it didn't. I did not feel confident about this trade, and it's a good example of how sometimes the best trades, you're they don't feel good, right? And actually, if you feel good, if you feel like amazing about a trade or extremely confident about a trade, that's actually probably a good sign that it's that something else might happen or it's not a great trade. Guys, I have just noticed that like this, for example, right? Just from an opportunity cost perspective, not only did it work out beautifully, but it worked out, pretty much like like a 50% drawdown like within 2 weeks. It just doesn't get better than that. Um, anyway, yeah, just I guess the moral of the story is just don't ever trust your gut. Let's see. Okay, so we have a similar example up here with the monthly levels. This is a good example as well to the upside, right? So we talked about how this monthly low was violated there, um, you know, and then you get the volatility pickup, and then we noted this monthly high right here. So price comes down, and you get your test up above the liquidity here. And this is an important concept to mention as well, is that anytime you get a extremely volatile move like this, you always want to fade the first pass of liquidity because it's always going to be a sell. And that ultimately set in the monthly high, that first fade. And then here you have this Wyckoff accumulation. You get your spring, and then volatility starts expanding to the upside. And really, that's when you create a new higher high on the monthly. And yeah, you get a little bit of a shakeout here where price runs liquidity above the old monthly high, and then runs down a little bit. But then you see the volatility come back into the market, picks back up. You essentially raise from 38,000 up to 50,000, roughly 52,000. And then you get a test back into those monthly highs, and there's your base, right? That's your base. And then it bases off that previous monthly high set in over here and runs up all the way to the run the liquidity above the previous all-time high. There's your monthly high right there. Now let's go back to the monthly chart and see what we got on this chart. Yeah, so you have this. So now you have this series of, on that run up, you have a series of higher highs on the monthly running up above these all-time highs right here. And you can see here that, price did, it wasn't as strong of a rally as the 2020, early 2021, obviously, because here, price just never retested the lows. But in the summer and fall of 2021 rally, it's a little less parabolic because you see price coming down and moving efficiently and testing the lows, basically. Not really here, but here you get a test of the lows. The lows are constantly defended until the liquidities ran above the all-time high, and then you have this indecision candle. And again, here's where the edge we're talking about comes into play. Now, liquidity gets ran below there, and we can see that when that low gets violated, now you have a change of behavior on the monthly, and that's where the volatility comes in. If you guys were trading this day, you know that this candle, you went from 53,000 to 42,000 in a matter of minutes. It was a very distinct moment for me as well. I remember trading. Well, luckily I had to stop here, but if it's a good place to know where volatility is about to expand. And really, if you can find a way that volatility, something to indicate when to expect a volatility expansion, that's golden because there's very few things that can do that. That's why I think this source of edge is really important. So anyway, we had that macro liquidity run and then the change in behavior. Um, volatility really started to pick up after that monthly low was ran. And the sell pressure was so heavy, you never really got a retest. And then similarly, you actually have a similar situation here as well. So you had this monthly low. This was a level I talked about very, very often. Just in the trade ideas, I had some long trades framed around here. I was using this level right here as an invalidation. You can see, we'll just go back to the monthly chart. The monthly high started getting taken out here, which made this start to look like a lower high relative to this low over here. Excuse me, not a lower high, a higher low relative to this low over here. It starts taking out the highs, change in behavior. Then you get a test down to the low. If this was going to continue the uptrend, what you'd want to see is these lows being defended. If they don't, then something different's happening. There's your market structure break, your change of behavior on this monthly chart. And if we go to this area, we can see here very clearly that when price hit that market structure break area right here, you did see a pretty dramatic increase in volatility. Volatility picks up and then reaches for liquidity below these lows right here. So it's a very important idea to have in mind. The reason why I have the RSI on the chart is that you can use the RSI to conceptualize where where these things are happening. So obviously, the area, if price goes parabolic and then all of a sudden starts taking out the lows, that's going to be more effective. You can use the RSI to identify that. If the monthly gets into the critical zone, and then you have the monthly RSI in the critical zone, and it starts to change behavior and violate the lows. It's just a way to illustrate the parabolic nature, but you don't necessarily need the RSI. It's just there to assist. Yeah, and you can clearly see that that's a pattern that has worked out previously. Um, if you just go, well, we'll just start from the previous peak here. You had this parabolic run up, then price gets up here. You have this run down below these lows after the parabolic run up, and then a close near the lows, trades below. So that would be your signal, right? When you have this close, because sometimes you could, take out the low, and then it's a stop run, and say, especially early in the month, if you run the lows, and then you just boost up, close higher. But when you see it run the lows and then close near the lows, that was the initial signal right there to start, hedging and managing your position. And of course, it ultimately led to this pretty big, significant downtrend. And ultimately after that, what you see happen is price comes down here, and then what happens down here when the market turns around, you see, during this capitulation phase, and generally you just see lower lows on the monthly. Price comes down here, and then it bottoms out here, and then this is your first signal right here when this monthly price action takes out this high. It just pops above, runs the stops, and then settles back down. This is like the area, that's especially the area you want to be paying attention to, because that's the area, liquidity has just been cleared, and the bulls are really, really getting back in the market and getting ready to push up and reloading their positions. You have the same dynamic here. So you get this dramatic push up. I mean, this is a 4x, right? So from 3,000 to 13,000. And, ultimately you see that monthly pattern we're talking about here, right? You get a little bit of an indecision candle, and then another indecision candle. At this point, you don't really know what's going to happen. Price could just base off here and keep going. But when you see price, come down and trade below, and even close below that low, right? It's significant because price hadn't done that, right? Price hadn't taken out the low for a period of months. I mean, it had been almost a year since price had violated a monthly low. So, and especially coming off a rally, when you start doing that, that's a sign that the market structure is breaking, things are turning around, and yeah, you get a an up move after that, but you still see sustained sell pressure after you see that pattern right there. Now, ultimately, we can go to the beginning of the bull run here and kind of see where, maybe that pattern didn't work out perfectly. And those are, when you're testing an edge, it's always good to look at the areas where, it didn't necessarily work out perfectly, right? Like, you, and how did it operate in those situations, right? How did you, so, okay, so you have this downtrend, and then you have a sustained uptrend right here. Well, you get a break of the monthly highs right there, and then ultimately you get a return below the lows. So, well, if you want to mark off this candle low right here, and then you get one push below this low, so that might have taken you out, right? Because you're thinking, you look at this, you're thinking, well, price is starting to create a new behavior here. I'm going to get long. And you can see here that price defended this level after that happened and ran back above these highs. So when you see this type of behavior, right, where the highs are getting higher and the lows are getting lower, you're getting higher highs and lower lows, that's showing you that volatility is expanding. And so in a case where volatility is expanding, it might take you out of the market, because ultimately when price runs back below there, you don't know. I mean, you still need to manage risk, because you don't know if price is going to reach for another swipe below these lows right here. So you got to manage it. But a lot of times when that happens, and it does end up being a liquidity run, you'll actually have an opportunity to get back in the market. For example, right here, right? So maybe you got stopped out there, but then you have an opportunity to re-enter right there. And again, then price enters a trending behavior where it keeps creating new highs, right? New high, and then even here this consolidation, right? It just defends the lows. You get sideways price movement, then it starts creating new highs, new highs, new highs, new highs, and ultimately then you only get that monthly edge, that change of behavior right there. So this is another good example where, depending on how you traded it, it didn't necessarily work out, but you know, it's still a good place to hedge, right? Because here, say it came up here, at this point in the market, we're looking at it in hindsight, so we know what happens. But if you're trading this live, right, a lot of people here were probably thinking, this is a lower high relative to this high over here. We're going to go much lower, and this is a continued bear market. I mean, that probably was a very common belief at the time. And really, you don't know whether that's true or not, but you know that you can hedge there when you see that change of behavior. And maybe you pull some of the hedge off on the retest of these highs right here, right? See, it runs down. But ultimately, this then when it starts reclaiming the highs again afterward, then you can pull the hedge off, and then let it run. So it's a good example of where it doesn't necessarily mean that if you see this that it's going to be suddenly a sustained bear trend, but it does show you that okay, here's a good area to manage risk, especially if you're in a long position. Um, yeah, and then we see what price starts making higher highs, and then again it gets into that trending behavior where you 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 get higher highs and lower lows. Again, here's an area where it may have taken you out of the trade because it ran below these lows, but then you see this behavior where it pushes up way above those lows and closes far above. Now, if you want to avoid a situation like this, you could wait. Maybe you wait for the second. You wait for some type of indecision candle like this, and maybe you prefer to see those type of candles. That would be a potential way to avoid a scenario like this. Um, Similar thing here, right? I mean, if you use, so here's a good example, right? You use these lows to manage your risk. Maybe price comes, takes you out, and then closes back above. Well, at that point, now there's no reason for the hedge at that point because you get the up close. This is a liquidity run. So it's not an all or nothing thing, but again, it's much better to put on a hedge in a scenario like this. And maybe you can peel some of it off in these brief movements. It doesn't seem like a lot on a monthly chart, but this actually is significant movement. Let's see. Yeah, this movement right here, that's 13%. Maybe you took profit, it pulled some of the hedge off at 10%. Again, it's a nuanced thing, but ultimately, it's better to manage risk than to lose money, essentially. And because you don't know when the top will be. It's just nobody knows when the efficient top will be. So price closes a bit higher, and then keeps running for the ultimate highs, and and then you get up here. So you get higher highs, higher highs. Things start going really, really parabolic here, right? Towards the end, you have daily candles that are doing 50%, but you see the lows are defended, right? Lows are defended, higher highs, but then you get that same signature here. And again, when price ran down below here, that could have been the market top. We don't know. We don't know. I mean, we know in hindsight, but um, you have to treat every price distinction as if it's a possibility, and manage risk. And in this situation, maybe price started taking new highs, and the market didn't end there. So you just peel the hedge and keep trading. Uh, so anyway, I hope you guys appreciate this video just as a way to manage expectations on what's happening in the market. It's something that's been useful for me and really helped me, in the past. Yeah, so if you guys like this content, please just make sure to like the video, subscribe to the channel, and catch you guys in the next upload.